Okay.
All right.
All
We're
right,
live.
we are live. All right, good evening, ladies and gentlemen. Thank you all for joining us this evening on another edition of the Fireside Chats with the Reformist. My name is Ephraim the Reformist, and it is my pleasure to welcome you all back to this wonderful session of the Fireside Chat. Today, we are going to be looking at the new tax reform, and we are going to be demystifying it to understand how it affects you, your businesses, your income, and also your investment. Okay, and I have with me on the studio today, in the studio rather, I have with me some really amazing individuals who are here to help me because I'm not a lawyer, a tax lawyer, and I'm not an accountant. I'm also a business person and entrepreneur, and I have these fantastic guys here with me in the studio today to help us really demystify these new tax laws and get us prepared with actionable insights that will make us ready to take our businesses to the next level. All right. So if you're with me, just a little bit of housekeeping rules. Questions are entertained here. You can drop your questions and your comments, your suggestions, any feedback at all. Drop it in the comment section live, and we are going to pick it up from there. And if you also want to participate, you can also indicate. I could also take your questions as well live. All right. So let us begin. I'm going to do a little bit of introduction of our speakers so that we are well aware of the portfolio of those people who are joining us. Okay, so first we have with me, I think I'm going to start ladies first. Yes, so let me start with Jumoke Salami. So Jumoke is a finance professional with over 9 years of combined experience spanning audit, tax consultancy, and loan recovery. With 5 years in audit and 3 years in tax advisory, she has developed a strong foundation in financial reporting, compliance, and strategic tax planning. Her 1 year of experience in loan recovery further enhanced her expertise in credit analysis, debt restructuring, and client management. Jumoke is passionate about delivering value-driven financial insights and supporting informed business decisions across diverse industries. Jumoke is the current director of finance at Away and Wilford, a consulting company. Please help me welcome Jumoke on stage. Jumoke, welcome on stage.
Hi.
All right.
Thank you so much. Thank you so
Glad you
much.
could finally join us. Glad you could finally join us.
Yeah,
All
happy
right.
to be
So
here.
I have amazing, amazing, amazing. So I have with me on the studio as well. I have with me a fantastic guy who has been doing a lot of work for entrepreneurs and startups across the continent, right? So his name is Osita James, and Osita James Uche is a Nigerian lawyer and technology entrepreneur. He's a partner at a leading startup law firm, Blackcrest Law, and the founder of Flourish Opportunities Network, Africa's largest scholarship support social enterprise with over 10,000 members across 5 African countries. Osita is the Chevening Scholar 2022 and holds a master's in innovation management and entrepreneurship from the Nottingham Business School and a diploma in technology and management from the Nigerian University of Technology and Management. In addition to his work, Osita serves as a startup legal operations mentor with Because International, a non-profit supporting startups in Africa through a biannual accelerator, and writes poetry and fiction in his spare time. So ladies and gentlemen, help me welcome Osita on stage. So Osita, welcome to the Fireside Chat with the Reformist. Thank you for joining us.
Thank you very much. It's a real pleasure to be here.
Amazing, amazing. So guys, we have started today. We're going to be looking at the new tax reform and its implication for your income, investments, and businesses. I know that just a little bit of assessment of our audience. Our audience spans across employers of labor, CEOs, mid-level managers, senior managers, business owners, entry-level career professionals, and everyone. And I'm sure they're very eager to understand how this new tax reform affects their own investments, their own income, and of course, their businesses. And today, that's what we're about to do. We are about to simplify everything for you so that once you walk out of this event today, you have a clear direction of what to do and who to call when you need help for your tax related issues and all of that. Okay, so let us proceed. Let us proceed. Then we're going to do an introduction with the types of taxes, just to lay, a foundation. So I think Osita can help us with some of the kind of taxes that we have operational in the country right now, and then we can look down into the changes that have been made and how it affects all the cadres. Okay, so Osita, please kindly go ahead.
Sorry, can you hear me?
Yes, we can
Yes,
hear you
we
now.
can.
Hello?
Yes,
Yes,
can
we
hear you
can
now.
hear you.
Okay. It's because the network is lagging on my end. I don't know what the problem is. But if you
Okay.
can hear me clearly, that's fine.
Yes, absolutely. We can hear you clearly.
You said you... Okay, great. So
Okay. So I think Osita is battling with network. MTN has really been doing us wonders. So let us do a little bit of intro on the types of taxes. Jumoke, please kindly go ahead and take on that, the type of taxes. I know we have the, withholding tax, the payee tax, and all of that. But, while Osita is sorting his network, let us proceed.
Okay.
Yes.
Yeah, so we, like you rightly said, oh, thank you very much. So, like you rightly said, we have company income tax, we have the payee tax, we have the withholding tax, we have the VAT tax. And for individuals, oh, I think it's coming up.
Yeah. Go on.
So for
sorry, my network was...
It's
oh,
fine. It's
okay,
totally
My network
understandable.
was a bit...
No problem.
okay,
So
I
Jumoke
can
will
hear.
just go on with the introduction.
So I was just trying to explain the types of taxes that we have, and so I was trying to explain that we have the company income tax, we have the withholding tax, we have the VAT, and that's the value added tax. We have the capital gain tax also. We have the, have I mentioned payee tax?
Yes, you
So
have.
most businesses, what a businessman would want to file at the end of the financial year is their company income tax, the withholding tax, and the VAT. While individuals like you and I that work with an organization will file our personal income tax, that's the payee tax, if you might put it that way. So those are like the types of taxes that, and there are also other taxes that are direct and indirect tax. All those ones are maybe going into integral into the tax bit, but basically for business and individuals that are here, our major taxes are the company income tax, the payee tax, the withholding tax, and the value added tax. So Tita, is any other thing to add?
Amazing. All right. Thank you very much for that introduction on the type of
Yeah,
taxes.
yeah,
Osita, do you want to
there are
add a few
some...
things to that?
Yeah, there are some other small taxes like the education tax that is charged on the profit of all the companies in Nigeria. And there's also I think the industrial levy, the one that is supposed to support
Development tax,
improvement,
development
Yes.
levy.
development of, yeah.
So
So
I
there's
felt like
also
on
that
that
one.
one. Okay. Okay. I was thinking that
No,
they
they're
all,
usually small.
yes. There's even national police fund tax. They are all under company
Yeah,
income tax.
there is.
Like that's what when
How
a
about
company is
the
filing tax.
National Housing Fund, NHF?
So they, yes, that is also under the pay tax. So
Okay.
that's
Okay.
how I would classify it. That's why I try to group it. That by the time you also go into integral of all these taxes, you would be able to understand what I'm talking about. Yeah.
Okay, amazing. Thank you very much, Jumoke and Usita, for that. So I think now we'll just dive right into it. I mean, we all understand that taxes are one of the things that help a nation to thrive, and the reason why tax exists, I mean, is common to everybody. But just in case, I think I would just like to run through some of the reasons why governments, implement taxes. Some people would like to say that. I mean, the government is not doing so much. We cannot see where all our resources are going into. Why are they, taxing us and all of that? But just for clarity, taxes are for revenue generation for a country. They help to fund public services like infrastructure, education, and healthcare. Those are the things that we are aware of. But another reason for taxes is also for wealth redistribution, right? To reduce inequality through progressive tax systems. Another common reason why tax exists as well is also for economic stabilization, right? To manage inflation, unemployment, and economic cycles. And another reason as well is the behavioral influence to encourage or discourage certain behaviors. Just like when you put heavy taxation on things that are banned or are considered harmful, more like thin taxes, like the taxes on tobacco and the ones that they put on alcoholic drinks in the north, right? And another reason is for resource allocation to guide investment and consumption through incentives or disincentives, right? So now that we've been able to put that into context to understand why, I mean, it's very important that taxation is done in any country, we'll go right ahead without further ado to really, get into the crux of this, the new tax reform, how it affects us, right? So I think I will just go over to Jumoke to, tell us what has been before and what are the changes, so that at least let us even understand what was existing, right? I mean, because there's been a lot of conversation going on. What do we have before, and what is this new change? So, Jumoke, please, can you kindly help us?
Yes. Okay. So thank you very much. So for the company income tax bit, so while I was doing my research, I was like, oh, for preparing for this panel, I was telling myself that I'll be a bearer of good news. So I'm here to give you guys good news. So the
Love
company
it.
income tax that we normally pay 30% on. So effective in 2026, we'll be paying 25% on your company income tax. So that's good news.
That's a good
That's
news.
good news.
That's it.
And
Yeah.
also for your personal income tax that you get to be charged, even as a low income earner, you're earning up to like 300,000 naira a month, you still be charged tax. Those are now being looked into. So it's now from 800,000 naira annual gross. So I don't know if I'll be able to share a slide,
Please go ahead. Go ahead.
a slide to show you the old tax and the new tax. So
Yes, go ahead.
just give me a second. Share image. Or I can share. I'm trying to.
You can. I've granted you access.
Oh, okay. Okay.
Yeah.
Okay. Let me check. So yeah. So
Okay. So it's coming up. It's loading. Yeah.
yeah. So if you can see it,
Yes, we can
so
see it.
this is what they charge you for the old tax rate before. The first 300,000 will be charged 7%, while the next 300,000 will be charged 11%. The next 500,000 will be charged 15%. The next 1.6 million will be charged 21%, while above 3.2 will be charged 24%. But with the new tax law, your first 800,000 naira from your revenue, from your also, I would like to put this out there that it's not your gross income that will be directly charged. Is your
Okay.
what's going to be charged is going to be your taxable income. So the
Gross
government has
taxable
also
income.
no, what did you say?
Does that mean taxable income excluding bonuses and the rest?
Yeah, so not bonuses. So when you get your offer letter, you get your gross that, oh, I'm going to
Yeah.
be earning, let's say, 1 million naira annually.
Mm.
So that 1
Mm.
million naira annually is not subjected to tax. So there are going to be other deductions from that 1 million naira before you now get to your taxable income. So let's say your pension. those are they've not classified them before. They say, oh, allowable expenses, but now they've classified them as deductible deductible expenses, which are now your pension, your NHF, which is now voluntary. In case you don't know and you have been paying, it's voluntary. You can decide to pay NHF, that's your National Housing Fund, or not. Also, your insurance. If you have mortgage insurance, like life insurance, you get to take that out of your total gross. You get to take, if you have like a life or a mortgage interest, if you have a mortgage and the interest on that mortgage, you're going to deduct it from your total gross. That way you now arrive at your taxable income. So out of which that your taxable income, let's say you are earning 1 million and you have removed all your deductibles, and your deductibles is, let's say, around 200,000 naira, just because of this instance, and you now arrive at 800,000 naira, best believe you'll be paying 0 naira on payee tax. But if you so you see that is good news, right? So that's why I want to.
Yeah, that's the good news actually.
Yeah, that's a good news. So your normal other deductibles that were like, such as also before I forgot something. There is now they removed your consolidated relief allowance. That's been eradicated and replaced with your rent relief. So let's assume you stay in anywhere you stay, and your rent is, let's say, 1 million naira. So you either pay 500,000 naira you get 500,000 naira as a relief from that 1 million naira, or 20% of the total annual rent that you pay, whichever is lower. So let's just say it's capped at 500,000. That was also part of a relief that the burden they are trying to take out of us, the workers. Yeah, so you get to enjoy that as tax benefits before you are now charged taxes on your income. I don't know if I was able to explain myself very well, but that's where I'm trying to get to. So let's assume now let's say you earn 10 million naira as your gross income. After when you remove all your deductibles, eligible deductibles is, let's say, like 1 million naira. So the first 800,000 naira on that 9 million naira that is your taxable income would not be taxed. But the next 2.2 will now be taxed with 15% tax, while the next 9 million will be taxed 18%. The next 13 million will be taxed 21%, while the next 25 million, depending on how your income is. Also, I'd like to share this with the public. You can just scan this code. It will take you to the Physical Reform Act, so you can read up on, and you can also put in your income and impute all this relief. It will take you to the tax calculator. You can just search for tax calculator. You put your income there, put all your relief that have been allowable. Remember, let me reiterate again. I say your NHF is voluntary. If you are paying it, you include it in it. If your pension, both the one the one your employee is paying, your employer is paying, and the one you're paying, you include it. Your rent, you include it. And if you have life insurance, you also include it, and those will be automatically deducted from your gross income, which will give you your taxable income, and your taxable income will now be subjected to the new tax laws, which the highest you're going to be paying as a personal income, no matter, even though you earn 1 billion naira, you're going to be paying 25% on that as tax. And I think that by the time you even calculate it, you should get a bit of incentive. And people that are the big boys, they will get to pay more. And yeah, so that's what I would like to share.
Thank you very much, Jumoke, for that. At least there's some form of relief, some form of good news, because there's been a lot of tension around this for a while right now, and people are seeking for clarity to know what actually is and what is not. All right, so thanks for actually giving us that and laying it bare, and also letting us know that there's some of recourse for this for us. Right. So let's go on to look more at some of the significant changes in the personal income tax. So how will this now affect freelancers or gig workers? I mean, for a while now, I know that the government have actually struggled to tax, freelancers, influencers, gig workers, and all of that. I'd like you to speak to this, Osita. How will these changes affect, the freelancers and the gig workers and the influencers?
Okay. You asked how
Yeah.
the new tax law. Okay, can you hear me now?
Yeah. Yes, we can.
Okay. Okay, great. So one of the advantage that gig workers have always enjoyed from time immemorial is that unlike their counterparts that work in a structured organization that is already registered and is constantly having to file their taxes, so naturally the company would sort of do the payee tax. So as you're earning your salary every month, the company you work for is deducting an amount to send back to the state government that of where you're resident in, because taxation for personal income tax is based on residence in Nigeria. It was an issue sometime in the past, but it has been resolved. So your personal income tax is based on the state that you're currently residing in. It was the reason why Lagos State and Ogun State had a problem back in the early
Some while ago,
2000s,
yes.
because people
I
live in
recall.
Ogun State, but they work in Lagos. Exactly.
Yeah.
So Lagos State was now like, why are they working here and they're paying their taxes to Ogun State? That if they want to pay their taxes to Ogun State, they should work in Ogun State. They should not work in Lagos and then say that they're residents in Ogun State. And also it was an issue. But generally, residence is the principle for personal income tax. Now, as someone that works for a company, someone that is a corporate worker, your taxes are automatically going to be deducted by the company and paid to the state tax
Comment.
board or whatever it is. Very good. Now, because of the new law, you can now get a relief. Just like Jumeke said earlier, you can get the rent relief, which means at the end of the year, you can go and apply, upload all the documents that show that your taxes have been filed. Usually you can download a tax clearance certificate after your taxes have constantly been deducted from January to the end of the tax year for your organization. So you can go and tell them that you have been paying your taxes and that you're entitled to the relief and you will get it. So the gig workers have been like ghosts from the beginning because nobody knows how much they're earning. Nobody knows who is paying them. I mean, it's been great. Don't get me wrong. It's been great, but that is about to change. Yeah, that's about to change. And the reason why it's about to change is because the government is tightening the fiscal belt and trying to bring more and more people into the tax net, which to me is good news. You may not agree with me. I believe it's good news because one of the most beautiful things about taxation everywhere in the world is that the more taxes the government collects, it's almost like the more taxes they collect, the higher the people demand for accountability. So they go hand in hand. So it's actually a good thing for Nigeria. Yeah. But again, you don't have to agree with me. You don't have to agree. Okay. It's just what it is. Every developed country in the world where a government misuses public funds, people on the streets, they're protesting. In fact, the governor or the president may not even be able to be re-elected because the people feel like my hard-earned money and you use it to do things that don't benefit the state or the country. So the government trying to impose taxes and collect more taxes is going to make them more accountable because now people are going to be agitating. If you are not paying tax before, you will now start paying. So you will be part of the conversation. If you didn't have a voter's card before, you're likely now going to go and get one. But let me even come back to the gig workers. Now, the good news for the gig workers is that even though you can no longer remain a ghost because the tax man is coming for you, a lot of those platforms you used to use to receive your payment, they are going to insist that they start tracking tax compliance on those platforms. Whether you are using GigPay, whether you are using Fiverr, or whether you are using Clever, or whichever platforms you are using, it's going to become a compliance problem for those platforms. They will not be able to receive your money unless you can show them that you have a tax identification number, right? But the good news is that the way that you can do it as a gig worker to try to minimize your taxes as much as possible is by creating a company. It sounds so simple. People have been creating so many companies, but you can actually use a company to reduce your overall tax liability. And I'm going to tell you how. So consider it the benefit of joining this live.
Amazing.
Now, companies in general always have what is called allowable deductions in law. Remember that the basis of taxation in every country in the world is law. The governor cannot impose tax based on his opinion or based on his feeling or because he wants to marry another wife. He can only impose taxes under law. So it means that you're only liable to pay a tax that a law that you are bound by says that you should pay, right? So the same law allows for deductions, and the people that get most of those deductions are companies. Some of the deductions that you can make are cost of salaries, capital expenditure for plant and machineries if you're doing like manufacturing and all that. You can also get deduction for this thing, charitable donation. You can get deduction for that as well. So as they like used to be up to 10%, it might be less now, but generally you can actually spend an amount in charitable donations and you're allowed to deduct it before your income is taxed. You're allowed to deduct it. It's part of the allowable deductions. So it means that a gig worker that decides to open a company, receiving the money into the company account instead of the personal account, then it means that before you go for your assessment or before you file your tax assessment, you can benefit from all those deductions. And guess what? Company income tax is what will apply, not personal income tax. And company income tax, thankfully, under the new law, would now only apply if your business has done an annual turnover of over 100 million, I think 100 to 250 million, which means that if you're a small gig worker and maybe you receive $5,000 or even $20,000, but at the end of a year, a tax year, it was still less than what is in the law, which is 100 million and 250 million, you're not liable to pay any company income tax. So that's like the easiest and smartest way to do it. Most people don't know this. Most people don't know that, right? It's a company. Once you register a company and you're receiving money as a company. Yeah, go ahead.
Yes, sorry to cut you in, right? So, I mean, some of the questions I've been getting is, would this not lead to double taxation? How do I mean? I mean, as a company, you are expected to pay payee tax. So if a gig worker registers a company, is expected to pay himself as the staff of his company. Would he not be taxed?
Yeah. So, no. So let me explain that part. Here's the best part. You can decide what salary you pay yourself. So if you, because I think Jumoke has already cleared the air on what applies to each salary band or income band, 800K, no taxes. And then if you earn above that, then it's 13% and so on and so forth. So there's already an established band. So you can simply pay yourself less than the 800K. As long as you're paying yourself that and the rest of the money stays with the company, which is still your company, by the way, then no taxes for you. So the point is that you can be smart about it and use the company as a way. I literally skirt around it, but yeah, it's very possible. It's very possible.
Thank you very much. Thank you very much.
But to be very clear, for those people that want to do this, just to be clear, the reason why the law allows such loopholes is because the government is very focused on incentivizing businesses. Medium and small enterprises employ over 90% of all Nigerians. So it's in the interest of the government that more people establish businesses, which is why Smidan recently partnered with government and they want to help over, I think, around 25,000 or thereabout register their companies free of charge. Now, if you register a company, you're employing people, which means you're solving unemployment. You're partnering with the government to support solving unemployment. You're creating services and products that ultimately create value in the economy. The logic behind not taxing companies that are making less than 250 million naira, is that you're not big enough to have really established enough. Nobody knows even how much you're paying in salaries and how you're struggling to maintain your operations. But once you've crossed that threshold, then the assumption can be that maybe you've now figured it out. But until you cross that threshold, the government is interested in ensuring that you remain a going concern, because you have salaries, you have people working for you, you're engaging them, you're probably even paying other business owners for different services. So you're contributing to the economy, right?
Absolutely.
So it's in the interest of the government to ensure that people continue to have businesses.
Amazing. I think that's actually good. I think it's some form of welfare package for the masses that the government has given to us to help us become job creators as against being job seekers. And I think that's actually a good one for small businesses. I myself, I'm also a small business, so I think this gives me some form of leeway. I'm actually happy about this. Okay, but let's move on. Something that people are really itching to know is how does all of this, now affect, their investment, right? Dividends, capital gains. How would all of this now affect, what people have stashed up somewhere? Osita, would you mind, going on that first before Jumoke throw light on it?
Yeah, I'm happy to take this. So capital gains tax increased from 10% to 30%, and a lot of people are not happy about it. And I get that, right? Just like Jumoke brought good news. So this part is the bad news, but there's also still a bit of good news there. But so the good news there is that, remember that the threshold for the companies have increased. Right, the threshold before you start paying company income tax has increased. So the capital gains tax for companies only applies when you've also crossed that 250 million naira threshold, which is good news. It means that as far as government is concerned, if you're earning less than that on an annual basis, you're a small business, right? As far as government is concerned. So if maybe you sold some cars, or maybe you sold some shares, I mean, it's not significant enough for the government to start asking you to bring 30%. So good news for small business owners and bad news for people that have bigger companies, because when they sell big stakes, they get to pay higher. But even at that, the new tax laws did not vary the provisions of the Startup Act. Again, I know all this because I'm a lawyer, right? So people should not feel like I'm too intelligent. I'm just a lawyer.
No.
So
I think this is what we're here for.
So the Startup Act 2022 provides for some benefits for investors. It provides some benefit for investors. So it's an opportunity for people to really start looking into startup investment, because as long as what you invest in is a labeled startup, you pay zero capital gains. Zero. Now, in the year when Paystack was acquired by Stripe, they had not passed that law. So I'm very sure that the people the Paystack guys that sold their stakes to Stripe had to pay the government 10% of whatever they give them. If it was $200 million, they probably had to pay like $20 million to the government. No cap. But now, the law is now existing, and it applies specifically to startups. It applies to technology startups. So if someone were to sell their stake in a technology startup, they pay zero capital gains tax. And again, the investors in startups also have tax credit of up to 20% that you can offset against your tax liability in the country. So assuming that let's say you have a tax liability of $1 million because you have a lot of assets and so on, right? and you invested $200,000, you're allowed to offset 20% of whatever you invested as tax credits towards your overall tax liability. So this is like a big win for international investors that are looking to do business in Nigeria, because if they invest in that particular industry, they can take advantage of the tax benefits for that industry. And then there's also another one. If you, for founders that are building technology startups, any like your research and development expenses are allowable deductions under law. Now, what that means is that, just to give context, we're trying to develop the next AI in Nigeria, the next open AI. And let's say we made a revenue of 5 billion this year. We can say that we spent 2 billion in research and development, as long as we can justify it under that law, is allowable. Now, remember that I said that government is interested in businesses thriving because they support the economy. Now, for startups can radically transform the Nigerian economy, as well as give us global competitive advantage. That's the reason why the law really gives this amount of benefits to technology startups. So if I were you, as someone that is looking for where to invest, I would probably consider investing in startups, because I will get a lot of benefits from doing that. Then also, for things like mutual fund, trying to invest in all these financial instruments like treasury bills and so on, apparently the FIRS is now imposing a 10% withholding tax when you get paid your interest, right? It didn't used to be like that before. So all those short-term, investments like the money market and so on, they're now imposing 10% on withholding tax on the interest that you get from it. Now, what my own advice would be for someone that is trying to figure out a strategy that can work for their investment is that instead of collecting the interest and then paying the tax, you can simply put back the interest in the investment and allow it to compound. Absolutely. Because remember, the tax is levied at the point of payment. So which means that if you were never paid the interest, then the tax was never levied. Of course, Jumoke probably knows that there are other more technical ways you can do wealth planning, but those ones are things you take to Deloitte, and people like that, and you have a lot of money so that they can plan your assets and you end up paying zero taxes and so on. But just generally, this one is basic. If you don't want to pay the tax, just don't collect the interest. If you don't collect it, then there'll be no basis to tax you, right? And then invest in government bonds. Government bonds don't have any interest. They are not charged that 10% withholding tax. So if you invest in government bonds, like all these government treasury bills, then you also get to avoid the tax in that way. So yes, that's my thoughts around that.
Amazing. Fantastic. I think you've done a very fantastic job on this, Osita. Thank you so much. I mean, some of the questions I was about to, follow up with have already been answered automatically. But something I'm seeing coming from the comment section is somebody's of the opinion that, that this, especially your exponentials pertaining to startups and all of that, this will only drive companies to other countries, right? That is the person's opinion. I mean, this will drive folks to other countries. Not sure why folks will keep their startups here in Nigeria. I see the benefit with what you have explained, right? And all the leeway that I've been giving to startups to encourage their growth and everything, right? I think this person is coming from the point that, okay, why would I put so much work, effort into building my company, and then when I exit, I mean, just like the story of Paystack, I'm expected to pay that much to the government. I think that's where the person is coming from. I mean, what do you have to say about that?
No. I think the person misunderstood. I said that before the capital gains tax applied to technology startups, but under the Startup Act, which the new tax laws did not amend, which means that the provisions in that law is still applicable to startups. That's what I'm explaining. So startups pay zero capital gains as long as they are labeled. So to become labeled, you have to apply, and they check different things. You've not been in business for up to 10 years, like the company is doing something technology oriented, and just like some basic criteria. That's what they look at.
Yes.
Once you're able to meet those criteria, you're labeled a startup under the Startup Act. So if you're labeled and investors invest in you, they can sell their equity without paying capital gains. And you, the founder, can sell your stake without paying capital gains. But again, remember that it's only when the company is up to the threshold of 250 million that you can now start paying company income tax. And I promise you, majority of startups in Nigeria are not even at that threshold yet, because most of them are still looking for funding to figure out their, So I don't think you should be bothered about it. If you're doing big numbers like 5 billion every year, so of course you should pay your tax. You're making a lot of money, so you might as well pay taxes. Yeah, so we operate a progressive tax system in Nigeria, which is why if you're earning less than 800, you pay zero taxes, and it increases from there on. So the higher you earn, the higher you pay. So it's a progressive tax system. That's how it works in Nigeria. So that's sort of the logic behind it. So if I'm a small company doing less than 250 million naira a year, then the government doesn't see any basis to tax me. But if I'm doing 500 million, 1 billion, 2 billion, I've now become stable, right? So the government believes that I should be able to pay the company income tax because I have become stable. Because you don't become like that without external funding, loans, and different things, right? I doubt that it is possible to be able to do an annual turnover of 1 billion in Nigeria without external funding. So if you've gotten external funding, you've got a great team, you've got a great product, you figured out distribution. So it means that you're stable enough that even if you pay the taxes, your business will not go under. So it's something like that.
Amazing. Like that. Thank you so much. Thank you so much for shedding more light on that, Osita. So my delectable audience, now that you've heard, you are very good to go. I mean, this is some leeway for you. You should be happy right now, as a matter of fact, because I think with this new reform, it's an open door for investors into Nigeria, and also it's an enabling environment for startups as well to thrive. Right, so the government is concerned about us and concerned about what we are doing. I mean, I think that's more like a pat on the back. If we're able to provide jobs for the growing population, at least let us support the people who are doing so. And I think that's a win for us, and it's an encouragement for every one of us as well. So thank you so much, Osita, for sharing big light on that. So I'm going to go on. I want us to quickly touch on how it changes the game for compliance. Now, on the compliance level and all of that, the cost implication and strategy shift for businesses of all sizes, right? You are a lawyer, yes, like you've rightly said, and we all know. I think you are better fit to help us really demystify this, right? What are the key compliance changes businesses need to now prepare for because of this new tax reform?
Sorry, can you take the question again?
Okay.
Yes. So what are the key compliance changes businesses need to prepare for?
Okay. So the first thing is that if you are a business that's already exceeded the annual turnover, I strongly advise you get a tax consultant or at least a law firm that knows what they're doing as a partner. Because unlike before, when you just be doing your business and making your money and you will not file your tax and nobody will follow you up. These days they have a database. Yes. So everybody that is earning above that, they can tell. They can actually tell. So they will send a letter. They will, in fact, if you've not filed after a certain period, they will charge penalties and they will send you a correspondence to inform you that you are now late with your tax filing, and that the penalties will keep accruing until you pay the taxes that you're supposed to pay. So the good news there is that usually the FROS allow people to pay it in installments, assuming you don't have like bulk cash to pay off the tax liability upfront. Because again, like I keep saying, the Nigerian government's interest is in trying to ensure that businesses remain a going concern. Because if businesses are not able to meet their obligations, they will let go of people. And when they let go of people, what happens? Unemployment increases. So I would say that certain changes, some of the compliance things that you should expect is that you're likely going to, assuming that you're working with freelancers or vendors, you're likely going to start dealing with their companies and not them as individuals again, because everybody will start taking up creating a company so that they can avoid paying that personal income tax directly, so that it will just be based on the salary they choose to assign to themselves. That's one. Two is that they need to start taking their accounting books very seriously. Very seriously. A lot of companies don't have, like, you'll be surprised, someone has been in business for 5 years. He doesn't know how much they made last year. He doesn't know how much was spent on expense. He doesn't know anything. So they will have to start taking that very serious, because again, the deductible expenses that are allowable under the company income tax is only expenses that you can prove that they were wholly, exclusively, and reasonably applied for the advancement of your business operation. So if you're not able to prove that, the taxman will not accept it as a deductible. So it means you need to track every naira, every kobo in your accounting. Like, you're meant to have a quarterly meeting with your accountant and say, okay, how are books doing? What are our assets? What are our liabilities? Do we have any loans? Because sometimes, because I've been part of several tax audits, what used to happen is that they will just, after you send your account statements, they will just apply VAT to everything in the account. So it's not for you to now start explaining that, oh no, I even got this 20 million as a loan from somewhere. So you're meant to, and it's easy to explain if you are keeping your accounting records. Like, it's very easy to explain if you are keeping track in the first place. It's very easy to explain, because there will be a record of when the money came in and it was loan, and it was categorized as loan. Right? And there could even be like expenses that you do not remember to collect. There could be a lot of explanations, but it's not a good look for you to come for an audit and now start explaining a lot. You're better off spending time with your accountant and your advisors, putting your books together, so that everything they're asking, you have a documentation to explain how that happened. Right? So I would say also companies need to invest in compliance training. Companies need to invest in it, because the responsibility to keep records cannot be that of the CEO alone or the operations person.
Absolutely.
Someone incurs an expense on behalf of the company and he wants the company to pay them back. They need to bring the receipt of what they spent. If they don't bring the receipt, the taxman might refuse to accept it as an expense. So it means that the team members of the organization, they also need to understand, like, some of these taxes. They should understand their own role in ensuring that the company is compliant. You get little things like, oh, maybe a loan that I took, the dates that I repaid it back, and follow up to ensure that an email was sent to confirm that the loan had been repaid back. All those little things, just to ensure that the books are very clean, because there are some books that are very well kept, and there are some books that are disorderly, like very, very disorganized. So I would think that these are like some of the major compliance steps, like compliance things that would change for an average business that is currently operating in Nigeria. You need to be more proactive in understanding what applies to you and what does not apply to you. Even advising your employees to take advantage of the rent relief. Some organizations have to take that responsibility, because some people will not know. Some will not know, and they'll be agitating for salary increase when they could have asked the taxman to refund them money from the rent, from their taxes that they're entitled to under law. Yeah, so that's just my thoughts around it. I'm sure Jumoke might have some more things to add to that.
Amazing. You've done fantastic work. So Jumoke, let's give Jumoke some time to add some to this beautiful conversation. Jumoke, go ahead, please.
So thank you very much. Thank you very much, Osita, for your wealth of wisdom. So what I would like to add is that self-assessment is very, very important for every company. Very, very important. You need to I see some businesses merging their personal bank and their company's accounts together. It should not be done. It should just separate it. Your personal bank should be for yourself. Your company's account should be for yourself. Because when a tax man comes, he will just, and you'll be surprised that there are a lot of intelligence that has been implemented into the system that will just be able to detect, if the amount of money you have in your account. We have BVN now that they could just use to just trace your bank account. Before, when you can collect money from one bank and just block the account. You can't do that now. Because if you collect money from one bank account, you go to another account, they will deduct your money from there because you have just one BVN. And that's what one of
Yes.
the things that the government are trying to do. They're trying to get an identification number for everyone. And we need to also play smart. It's better to just do the right thing than do the foolish thing and also pay penalty for it. So it's very, very important to keep your record clean. And I would advise business owners to just try. It might be maybe a bit expensive, but just try to get a tax consultant to do a tax health check on your account. Because by the time you do a tax health check, you know where you fall into, you know what your shortcomings are, you know what you are fighting against, you know what to expect from the government. But if you don't do all those, I don't know. Also, you can also do this for yourself. Keep a good accounting system whereby you document everything. You understand your books, you understand your numbers. You're able to explain any expense, any income that comes into you, and you have a clean record of it. So that way, if you submit yourself at the end of the year, that you submit your documents to the government and you file you do your self-assessment and every other thing. I don't even think that you have much issues because they would have seen what you've already filed. They would have checked
Yeah.
themselves and that would just be fine. So also, I'll also like to tell small business owners that there is also a good news because I'm a sharer of good news on VAT.
Yes.
So you can get refunds on your VAT. But how do you get these refunds on your VAT if you are not keeping a good record? So they say small business are not eligible to pay taxes.
Mm-hmm.
You're not able to pay VAT and withholding. So if you now the process of getting, let's say you're trying to produce your process of production, you pay VAT to maybe a service, somebody that comes to do something for you in the house,
Yeah.
and you pay VAT already. You are supposed to keep that receipt and tender it to the government. The link I shared earlier on, the QR code, you need to get yourself familiarized with it, tender it to the government, and they are eligible to pay you within the next 30 days for all those your VAT that has been deducted from you. So it is just very good to keep your record clean so that the government will not they will not run street on you, and you will not run street on the government. So
All
so
right.
your VAT are
Thank
now
you.
refundable for small business. So you are not even you're going to be enjoying tax as a small business. And I think the threshold for small business is I think is 100 million. So your turnover or your tax your fixed assets, whichever of it is 100 million. So, and for I know you asked a question on investments, that how will
Yes.
the investment be treated here. So if
Yes.
you have an investment, all of them, before when you have like a gain on investment, you pay capital gain tax on it of 10%. Right now you can now charge everything, both your losses and your gain. You charge everything to your personal income tax. By the time you are doing your self-assessment, everything will now be deducted with those parameters. That way you don't tend to pay only when you win, and when you lose you don't pay. When you lose from an investment is a
Investment.
deductible. So I mean, from an
Yes.
investment is a deductible. So those things are things we need to just look out for and ensure. A tax consultant is your friend, a lawyer is your friend. We're here to help you and make your life better. So
Absolutely.
that's
Thank you very much.
that. Don't run
Somebody's
away from
asking.
there.
They will
Yeah.
eventually come back to you. Absolutely. Somebody's asking, I mean, this is a question like, okay, so we need tax consultants. Do we also need tax lawyers as individuals?
So as individuals, you need a
Wait,
tax
wait, wait,
lawyer.
wait.
Like,
Hold
do
on.
you,
Let Osita answer
individual that
that.
have a
I think
company?
that should be for Osita. That should be for Osita.
Okay.
Let Osita answer this. I
Okay.
want to hear from Osita. Someone
Tax
is
lawyer.
saying,
Okay.
do you also need a tax
Wait,
lawyer too as an individual?
I think there's a
okay,
technical
as an
issue.
individual, I
Network.
think, yeah,
Yeah.
no, I can hear you clearly. I can hear you clearly. So what I think is that a company definitely needs a tax consultant, and they even still need a lawyer, because at the end of the day, when there's a dispute, it's still the lawyer that you will send to the tax appeal tribunal, not your consultant. So for companies, especially people that are not small companies that are within that 250 million threshold, as long as you've crossed that threshold, get a consultant and a lawyer. You need the both of them. So that anything the consultant is saying, if the lawyer does not agree, he will write correspondence to the agency and dispute whatever they sent. Do you get? So that's like the advantage there. But for an individual, I think that you can start with a tax consultant, and as your income grows, then you can involve a lawyer, because I actually think lawyers are more expensive, to be fair. So I think you can start with a tax. And as your lawyers are more expensive because
thank you for being honest.
No, I'm being honest, because the lawyers can consult on the tax, but they also actively litigate against anything that's against your interest. So naturally, being able to get a lawyer that is looking out for your interest like that is going to be more expensive than just someone that is helping you keep the track. They keep your income in check. Yeah.
Okay. Yeah. Thank you very much. So I think we're talking about these tax refunds, especially on housing, on pay tax, employees, and all of that. So somebody's asking, has the government actually refunded anyone?
Yes, I'm actually aware of some people that have received their own.
Amazing.
But it just takes a lot of time, and you need to keep reminding them. So, and again, it varies from state to state. So some states are very quick to quickly process it, while some other states sometimes delay. But the point is that if the law says you're entitled to this relief, you're entitled to that relief. That's just the point. So I would suggest that people apply.
Of filing that, how would they do it? How would people do it? Since this is an individual task.
I think there should be a way to do it on the platform. You know, the laws were just passed, so they're probably going to update the platform with the new process, because Nigeria is now actively trying to digitize everything. Even CAC now has AI and stuff. So I think that by next year, it will be very easy. Everybody can see how to do it, how to file your taxes, like maybe the different things you need to upload and so on. And you should also see there how to request for any of the reliefs that are available to you.
Amazing. Jumoke, I think Jumoke shared a slide earlier on when we got started. Jumoke, please, you would like to project that slide again, just for those who are joining us to just see and also scan, so they can have access to the link and be able to
I don't know.
some calculations.
My network is lagging. Can you hear me?
Yes, I can hear you.
Okay.
I can hear you.
Can you come again with your question?
Yes, as I would like you to project that slide again on that tax calculator, that link. Just that slide.
Wow. Okay.
Did you close the tab?
I think my network is just doing a lot at the moment.
Okay, no problem. We'll proceed while you're trying to figure that out. So I also have a question here. Some of them I think we already answered earlier on in the beginning of our conversation, but just to revisit it for the benefit of those just joining us.
Can you share? Right? Can you see my screen now?
Okay, it's coming up. It's coming up.
Okay.
So what happens when a business owner makes a financial transaction without putting a designation on the transfer, where such transactions will such transactions be lodged? Okay, so the question is, what happens when a business owner makes a financial transaction without putting a designation to the transfer? Where will such transactions be lodged?
So, oops, I think I need to stop sharing so that my screen does not look messy. So, can you come again with the question, because my network is lagging?
Okay, so what happens when a business owner makes a financial transaction without putting a description on the transfer? Where will such transaction be lodged? Yes.
Okay, what is the transaction for? So, like in accounting, for every credit entry, there should be a corresponding debit entry.
Yes.
So it is very, very important, even though you do not explain, you do not describe the transaction. If the transaction is a gift, when they go to check that person that you say you've transferred money to, remember that there are intelligence that has been in place now. When they check the person's account and it's not a service that you render to the person in um whatsoever capacity, that transaction will be treated as a gift if it's a gift. But if it's a service, the person would, and is an income to the person will have to pay a tax. But let's say I'm sending money for my mom or to my siblings or to anyone, and is a gift. I always try to label it. That's why it's very important we should label our transaction, not for that, just for tax purposes and for your own
Yeah.
self-assessment. Because by the time you see what I think I'll ask everyone to do this at the end of this month. Try to print your bank statement and just go through it from the beginning
See,
of the month to the end of the month. You will see where your money is going to. You will really
It's
see, and that
important
way
so that you will know who is spending your money. If it is you that is spending your money
yes,
or your
yes. And again, it will make you more conscious of what is really going on with your finances. So I'll advise business
absolutely.
owners to describe whatsoever thing that they are transferring. That's why the description button is there. Just put it there. And some banks, you will not even be able to send the money if you do not describe the transaction.
Yes.
So it
UBA
is
is one
very,
of
very
that.
important. Yeah. Okay.
Yeah,
Yeah.
UBA is like
So
that.
please just business owners, it's very, very important. Just describe your transactions um going forward. Secondly, I would like to
Okay.
say that for the NHF that I was talking about, I think you mentioned something on NHF, but I heard it slightly.
Yes, yes. I was going to come to that. The National Housing Fund, and in
Yes.
relation to this current MREIF, which is the housing mortgage that the government is doing, right? How can that was the question I was going to put for later, but if you want to go ahead right now, but you can go ahead.
Oh, okay. So for NHF, if you're paying NHF, given the fact that for private entities it is voluntary and for government workers it's compulsory, that NHF you can actually get a heavily discounted loan from the government with your NHF. Also,
Amazing.
now that the government is um putting out mortgage out housing, you can also apply for it. Given the fact that you're already paying your NHF, those are part of the benefits you can enjoy from your NHF. And also, after every 6 months, I think you are eligible to get you'll be able to get some percentage. I'm not certain of that. So let me don't give too much good news on that. But I know that
Okay.
at retirement, if you did not utilize your NHF, you are
Mm.
to request it back from the government and they will give it back to you. Also, let us put
So,
it out there. Normally, NHF is 2.5% of your of
salary
your of your basic salary. But now
goes.
NHF, I think as at 2023 or 2024, is 2.5 of your gross income. So that's why they made it voluntary for people. So there are benefits that you can enjoy from your NHF. Yeah.
So good. I think that's also another good news because it means now that before, unlike now, we didn't know where the NHF was going into and all of that. But with this new housing mortgage that the government is introducing, our NHF can now be applicable into getting those houses. I think from what I learned, if you go through the website, the MREIF, I mean, there's mortgage, just make a deposit and you pay over 20 years and you can own a bungalow, a duplex, a 2 bedroom, a 3 bedroom, and all of that. So I think that's another good news for us. If you do not know about this before, now you know. I think you should go and do more research about that on how you can apply,
If
your
Ephraim,
NHF. Yes, please.
Ephraim, I was going to say good news if we trust the people that built it.
Even though
Because if we also don't
this
trust the
issue of
standard of
trust.
what was built, I'm not, yeah, it's a big thing. I would not pay for a house built by the government. I'm sorry, I'm not going to
Oh,
do that, right? If they work with some real estate companies that we know and trust,
mm,
then fine. Because it's more like, I don't know how to put it, but let me put it this way. We are in a very low trust society where
absolutely.
individuals
I
by
agree.
themselves and their businesses have more integrity than the people
Mm,
perceive the government to have. You
yes.
get, so that's what the challenge. If the government is the one building it, I don't think that a lot of people would be interested. But if they are partnering with established real estate companies that
Establish
people
and known
know
real estate company.
to build it, then then that can, because it's more like if the houses are bad, the real estate has their reputation at stake. So that would matter more. But I don't really know if the government will care if their houses are bad or not. So that's also another thing.
Meanwhile, you're still paying on it every year. You're not even
So
paying
I'd
on
like
it.
to
And
add
how do you
something
pay
to
back?
I'd like to add something to what he said about I know that it's Nigeria and our government do us anyhow. But I want us to stay positive. And the fact that we're now paying this much of taxes, we are now making them more accountable, and we don't even know the kind of powers we have within our hand. If the government are doing something that is wrong, it is so funny that a lot of people don't know their rights. And we have a lawyer here. They can actually sue them and question them that, oh, why are you giving this contract to this maybe a developer, or why this developer, why not a better developer? You can even propose to them. It's something that we as a country need to come together, and let's just first trust them. Let's trust them. Let's leave. let's not lead with
trust is end. So the government has
yes,
not
I
It's
know
becoming a
let's
political
stay positive.
conversation.
Let's stay positive.
It's becoming a political conversation. No,
No, it's not. It's not. No, 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 no. I'm not a political
some of us are not happy.
I don't have
Let's
so let's not take it there.
It's becoming a political conversation. Yeah, let's
like just
But
like
yeah, you can actually get loan
But like-
from NHF, Shah.
No.
Yeah, you can get loan.
But
Government
just like
loan.
what
if
he's
the
saying, I think
government
we
has
should get more
been
involved.
showing that they care, it would have been
Yes.
different. Like if they were showing that they cared about the rule of law, it would have been different.
safety.
They removed the sitting governor for 6 months. Nothing happened in the country. They sacked
true. So
people
why-
that were elected in a
why would
House
they-
of
why would somebody
Assembly,
want to
and nothing
take the
happened.
government
So I
involved?
don't know about. so if anybody's telling me
Okay.
about going up and
I
speak
think I
up,
understand you.
tell the
That's
government
the
that they're
truth.
not being
Nobody will actually
accountable,
want to.
I don't really know. I
Yeah,
honestly
nobody
don't
will
know.
actually want to go through the
But
stress.
I'm
of,
just saying
taking the
they
government
have
to
not
court.
exactly behaved like people that have integrity. So unless they are working with a real estate company that we all know and trust, that unless it's people that are willing to risk it and find out whether the houses are good or not. But for me, I would not take it. I'm not going to do it if it's government that is building it. I would not take it.
So I think
I wanted to
that's
say
what
something like
Okay, go
there's
ahead.
an advantage that people can there's something people can take advantage of to reduce their overall personal income tax. I forgot to mention it earlier. So you can increase your voluntary pension contribution. So your personal income tax is deducted by the company you work for. So it's after they've it's after you deducted your tax that you're now paid what is remaining, right? But the pension is deducted first, which means that if you increase your own voluntary contribution, it will reduce the overall amount that you're taxed on. So let's say you're earning 1 million, just for context. Let's say you're earning 1 million and your company deducts, let's say 100,000 or 150,000 every month towards your pension, right? And you decide that you want to contribute an additional 200,000. Remember, it cannot be more than 1/3 of your total income, by the way.
Yeah.
So if you want to contribute 200 or 300K extra, it means that you're going to be taxed on the remaining 600K. You're no longer going to be taxed on the entire 1 million. So a lot of people don't know this, but I decided to just say it so that people would know. If you increase your voluntary pension contribution, you can actually reduce your overall tax liability. Again, I've heard a lot of people saying that they don't even want to do pension contribution again, blah, 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 because they feel like the employers are not sending it to the government. So, of course, there are going to be unscrupulous people like that. But if you work in a good organization that does their filing, you get your tax clearance and all that, strive to increase your pension contribution, because after like 3 or 5 years, you're allowed to withdraw half of your entire voluntary contribution, which is also very helpful. So let's say you start contributing when you just got married. By the time your kids are growing, you can withdraw a sum and pay for school fees. So just sort of think around it for tax and financial planning.
Amazing. Thank you very much. Thank you very much. I think I have one question here. Somebody is looking to get more information on withholding tax, right? They ask us to shed more light on it. Who would want to go for that?
I think Jumoke should go for that.
Okay, Jumoke, over to you. Yes, shed more light
Sorry,
on
I'll
withholding
share.
tax,
Okay.
please.
I'll share my
Yeah.
screen. Can I stop sharing? Can you still see my
Oh,
screen?
yeah. No, we can't see your screen.
Oh, okay.
No, we can't
So
see
what
your
was the
screen.
question?
Yes, can you shed more light on the withholding tax, please?
So withholding tax are taxes that are placed on service rendered to maybe companies or individuals. So I don't know what the person wants to know exactly on withholding
Only
tax, and
how
it's
it is done,
10%.
how it is done, when it should be done,
Oh,
its implication and all of that. Yes, I think that will help.
so how it's done? It's 10% of
Yeah.
the, and it should be deducted at source.
Okay.
It's something you. So let's assume I'm an organization and Osita is a lawyer and is
Mm.
running a service for me. I'll deduct 10% on the total amount I'm paying him. I think
Okay.
10% and 5% for service. I think Osita, is it 5% or 10%? I think either of the two. So if it's 5%, I deduct 5% of the total amount,
So
and
it's it's
and it
it's
can be
five
used as
percent.
credit.
It's 5% when you're local, and it's 10%
Yeah.
when you're foreign.
Okay.
Okay.
Yes.
Yeah, so it's
And
5%
also,
if the person you're working with is a local person. Then if it's a foreigner,
mhm,
it's
yes,
10%.
10%. Also, you can
Okay.
use it as a tax relief. If you have paid withholding tax, you can keep when you have your withholding tax credit notes, you can use it to reduce your tax liabilities. It can be used to reduce your tax liabilities. So those are like one of the benefits of withholding tax. Except the person
Amazing.
has other questions they want to ask.
Okay, amazing. Thank you. Thank you very much. I think we've actually had a very fantastic conversation this evening, and we're coming up to the end of today's fireside chat. I would like to take one or two more questions. So if you have your questions, you can drop them in. Oh, somebody said there's a word. Okay, there's a withholding tax act that says of 2025 that says 2%. Right? I don't know how true that is, but that's just an opinion or a comment on the entire withholding tax conversation. So a question here is, how do you increase your voluntary pension contributions? Do you speak with your HR or open a different pension fund account? I think for that you need to speak with your HR, and then
No,
you can get you can get in touch
don't
with
do that. Just speak to your HR. You can
with
write to
your HR.
them
Yes,
to
yes.
increase your
I think I
voluntary.
still.
Yes.
Yeah, and I think you can also have I think the way they do it, if I can take an example from my own, you can have your own ID, your pension ID, and you use to track what your company is, contributing to your own pension. And when you visit even if you don't visit the HR, that same uh, holding company for your pensions, if you visit them, you account with them, and you can have access to it, and you can continue managing it either through their app or directly with any person that they assign to you. So you can do that. I think I did that recently too. So I have some knowledge on that. Yes.
Yes. Yes. Yes.
So don't go open
And
a
I
different
want
one, please. Use the
to,
existing
yes,
one.
use just speak to your
No, no,
HR.
I'm
They'll
coming. No, I'm
definitely.
coming because it's possible that there might be some gig workers and so on here. So let me
Yes.
just
Oh,
address that bit. Yeah, there might also be that
Okay.
angle. So let's say you're working in corporate, but you've got your side thing that you're doing
Mm,
that is also now picking up. Let's say you have a company that is also picking up. Maybe you're doing event
mm,
management and so on. So of course, obviously, just like Jumeke has said earlier, you need to place yourself on a salary, in order for your personal income to now be based on the salary that you're placing yourself on in that your company. So that salary that you're placing yourself on, you can actually do your pension contribution out of that salary as well. But here's the trick. Because the government knows that, pension contributions are not taxable and all that. So they would want you to
mm,
increase the salary that you're paying yourself in order for you to have a significant enough voluntary contribution that makes sense when you compound it in 10 years. So it's like, how do I put it? It's like trying to eat your cake and have it. You can't want to avoid paying taxes by reducing your salary and also want to be able to make a significant sum in voluntary contribution. But yes, it's possible to have two different pensions, because if it's a different company and it has employees that you're also contributing pension for, so naturally, as long as you yourself, you're also an employee of that company, you can also have pension for that company, right? But remember that the pension voluntary contribution cannot be more than 1/3 of whatever your salary is. So it can't be more than 1/3 of it. So if you are paying yourself 50,000 monthly to avoid tax, I don't really know what a contribution of 20,000 or 10,000 will do for you.
Okay.
So you can't eat your
That's
cake
amazing.
and have it.
Yeah, I don't think
Yeah, and I
somebody's
know
asking
that.
are pension payout taxable? No, I don't think pensions are taxable.
No, they are
they?
not taxable
No, they are not.
because
They are not taxable.
the pension that you're paying is going into a pension company. Let's say ICO. I don't know if ICO is still in existence. ICO. They invest in those those money that you're paying, and they suffer tax. So if they now pay you out, because the interest on it suffers tax, they now pay you out, they shouldn't tax you. So they are fully tax exempt. And yeah. And also we should also, as individuals, I feel like it is very, very important for us to be well informed. Try to check you for your pensions. Try to check what rates did they put you on for your pension. You know, some people, I'm not certain, but I feel like some people, maybe they'll put them in a safety net whereby they don't get much interest on their pension. So you, in all those things, you need to check it. Speak to your custodian, your pension custodian. Oh, what band am I on? Let me know so that I can. You can even tell them to take you to the highest band that you, because it's depending on the risk and your age also. Those things they look at them to put you in a particular band. But if you're very risk, you have mind, you can just go ahead and increase it, tell them to take you to the highest band so you can get more interest. And at the end of it, it will be for your own benefit.
All right. Thank you very much, Jumoke. I think we have been having a great conversation so far, and we're nearing the end of this edition of the Fireside Chat. Just a little bit of information, excuse me. So this is brought to you by NXU Nigeria Connect. NXU Nigeria Connect is an alumni community, or is a community of Nexfordians. So Nexfordians are students and alumni of Nexford University, which I'm also a graduate of. And so on this call, we have plenty of them on this call as audience, and that's why the questions have been coming in non-stop. And also, this session is also sponsored or partnered, people who are partnered with us. We have Perimi. Perimi is a social discovery app for finding out what to do around you. We also have Foresight. Foresight is a tech consulting company. And of course, we have PeriPay. PeriPay is a payment solution. We have Liftally. Liftally is an accounting solution. And then, of course, we have Black Crest with us, the person of Mr. or Sister James. And then, of course, we have Ewe and Wilford with Jumoke Salami. So, guys, I think I can take a few more questions. One, and after that, I'll bring this entire session to a close. All right. Okay. I think I'm seeing a question. Is it a question or a comment? I think you may want to rephrase your question, Mr. Collins. Our question is not so clear. If you can quickly rephrase it, then I'll put it up, and any of our experts can take on it. Okay. So somebody's asking, okay, I think we've treated this question as well. How do you increase your voluntary pension contributions? Okay, I'm looking through the comment section to see if there are any questions that I may have missed out. Okay, I don't think I missed out any.
I thought we had addressed the one for how to increase the voluntary contribution.
Yes, we've done that. We have done that.
We have, right?
We have done that. Yes, we have.
Okay.
We have. So, without further ado, I think it's time to bring this beautiful session to a close. I'm going to bring this session to a close with a demo. I think we have one of our partners have provided for us a demo for their products. You may want to go check it out. They're called Liftally. It's an accounting solution. So Liftally will help to make things easier for you. It also helps accountants. So even if you're an accountant, it will also help you. If you're a business owner, it will also help you. And to also make accountants who you've employed for your businesses, also make it easier for them as well. So you can also hire an accountant and also get on Liftally as well. So, and I heard that they are giving the first 6 months free. So you may want to take advantage of that as well. So, ladies and gentlemen, a quick break for us to see a demo from Liftally.
Welcome to Liftally, your complete accounting and business management platform. Whether you're managing sales, expenses, payroll, or production, Liftally brings everything together in one simple, easy-to-use system. When you log in, your dashboard gives you an instant overview of your business, invoices, bills, payroll, and performance, all in one place. Creating an invoice or recording a bill only takes a few clicks. Just choose your client or supplier, add the details, and Liftally keeps everything organized and connected automatically. Managing expenses is just as easy. You can record your costs, upload receipts, and quickly see where your money is going. No spreadsheets, no stress. Liftally also takes care of payroll. Set up your employee profiles, process monthly pay runs, and generate payslips in seconds, all linked directly to your accounts. For businesses that manage stock or production, Liftally connects your materials, bills of materials, and production orders, so you always know what's in stock and what's being made. Behind the scenes, Liftally takes care of all your core accounting, your chart of accounts, journals, ledgers, and financial reports. You'll have everything from a trial balance to a full balance sheet, plus an audit trail that keeps your records transparent and secure. You can also plan ahead with Liftally's budgeting and project tools. Track your costs, set financial goals, and customize your company profile and settings to fit how your business works. Liftally makes managing your business simple, organized, and connected, whether you're a small business, a growing team, or an established company. Liftally, bringing your numbers and your business to life. Visit liftally.com to get started today.
All right. Thank you, guys. And we've come to the end of today's session. Thank you guys for joining us. Thank you. I can see a lot of people here. Thank you for taking the time to join us. And if you have missed out on this, you can always go to our YouTube channel and catch up on everything. The Fireside Chat with the Reformist comes up bi-weekly, and at least we hold at least 2 sessions every month. And I think the next session is going to be in November. So watch out for what we will be talking about. Thank you so much to our amazing speakers. Thank you, Jumoke, for honoring my invitation, and thank you, Osita. I only just got connected to Osita recently, and he graciously accepted my request. Thank you so much. I appreciate your honor. And every other person who have supported us, may I fail to mention your names, please do not be angry. Thank you for the referrals. Thank you for comments. Thank you for directions, and thank you for the support so far. And if there is any other thing you need to get on, or any other information you need, you can reach out to me personally, and I'll be sure to direct you to any of the resources. If you also need to get in touch with the speakers, you can reach out to them directly on LinkedIn. They're very friendly, so as soon as you send a request, they're going to accept. All right, and if they permit to share their numbers as well, I will also share their numbers. All right, so thank you very much, everyone. Do enjoy the rest of your evening. Cheers.
Oh, okay. Thank you so
Bye-bye.
much. I'll share you the
Bye.
slide so you can share with them. Thank you.
Thanks
All
for
right.
having me.
Thank you. Thank you.
All right. Have an amazing evening, everyone. Bye.
You too. Bye.
Bye.